In today's video, I want to break down the massive tax refund that I just received from the CRA. I managed to receive approximately $15,000 back this year. And today, I want to go over exactly how I got that. So without further ado, let's jump into it. The first and the biggest pillar that we all have as Canadians is the RRSP. You can contribute up to 15% of your year's income into this account. The CRA gives you a refund based on your marginal tax rate. Because I'm in a higher tax bracket, so I had to make sure that I maxed this account out to maximize my tax returns. So for me, my RRSP limit was $33,000. My employer actually does a 50% match on my RRSP. And this is something that all of us have to take huge advantages of. It's because it's free money. For every dollar you put in, your employer puts in 50 cents. And so it's the easiest return that you can get. And so once I calculated how much my employer put in, I realized that I had around $15,000 worth of room left. As soon as I found that out, I topped up my RRSP account with the $15,000 that I calculated. Since my marginal tax rate is close to 50%, that contribution alone gave me around $7,000 worth of refunds. And so this is to show that the RRSP is an incredibly powerful tool. The second strategy I use is to max out my FHSA account. So most people use the FHSA account to save for a home, but I don't intend to use it that way. I treat it as an extension of my RRSP account. That's because I'm not planning to use this money to buy a house and instead just roll it over into my RRSP after 15 or so years. So essentially you get $8,000 every year to contribute to your FHSA account. And this is a pretty simple account. As soon as 2026 rolled over, I put in that $8,000 into that account. And the tax refund that you get for this account is again at your marginal tax rate. So that's at 50%. And so if I put $8,000 in, I would roughly get $4,000 back. So this account is fairly straightforward. So something that I want to emphasize is that if you are not using your RRSP and FHSA account, you are putting a lot of money on the table. I have already made a video on my strategies to maximize these accounts. And if you guys are interested in that, please check out that video. My third pillar is the margin interest that I was charged in 2025. So if you didn't already know this, if you borrow money on margin to buy a stock in a non-registered account, that interest is tax deductible. So last year was my first year of trying out margin. And so this was my first year that I could deduct that interest. I use Wealthsimple for my margin investing. As part of my 2025 tax report, they provided a statement named interest and charges. And this essentially tells you the entire margin interest that you paid in the year 2025. And so I took that number, which was around $8,000 of interest, and then I added that to my tax return when I was filing it. So the deduction is at your marginal tax rate. And so because of my high tax bracket, the government essentially subsidizes half of my borrowing cost. So every dollar of interest that I paid, I get roughly 50 cents back. So if you tallied up all of the refunds that I theoretically should get, the total would be close to $15,000. In reality, I got $15,235. It's incredibly important to know that this refund is not free money. And if you think about it that way, you're in the wrong mindset. Essentially, this tax refund is just the government returning the money that you have earned. And so it would be best for you to not spend this on a vacation or get a new gadget, but instead invest this money into your non-registered account. And so that's exactly what I did. As soon as this $15K hit my account, I immediately moved this and paid down the margin loan that I had. Speaking of my margin loan, if you have kept up with this channel, you would know that my margin loan at the end of last year was around $200,000. And this year it's ballooned towards $300,000. So after my 2025 experience, I'm way more comfortable holding such a large margin loan. Because of my marginal tax rate, the effective interest rate that I pay for this loan is much lower than the 4% that Wealthsimple charges me. My long-term goal is to hit a margin loan of about $500,000. I think that's a good number for my age and my risk appetite. And so after I reach that number, I think I'll just stop borrowing more money. Currently, I'm holding around $300,000, and through 2026, 2027, I'll continue to add more to my margin loan until it hits that $500,000 sweet spot that I have. If you're interested in my margin journey, feel free to subscribe to the channel. Like always, I hope this video was useful for you, and I'll see you guys next time.